Hey everybody, it's Thursday, and it's time for your Thursday thought. My thought for you this week is about investing, and in particular investing here in the Colorado Springs, Pikes Peak region. And there's obviously different ways that you can invest. There's obviously buy and hold long-term rentals. There's obviously fix and flip potential. There is and there's right now there's short-term rentals. That's become a little more difficult over the last year and a half, but still a viable way that people are investing in real estate. And the last one is kind of fun, is house hacking, to where you buy your own house and then you do a short-term rental, or you rent out a room or something along those lines. I have a friend in Denver who bought a 5-bedroom home, more than he should have afforded on his own, but then he house hacked, rented out 4 bedrooms, and had more than his mortgage covered. But really, I want to talk about the kind of, those are all different ways to invest here. I kind of want to talk about the buy and hold, the long-term rental scenario here in Colorado Springs, because I've had lots of investors over the last probably 9 months buy a piece of property here and turn it into a long-term rental. I shouldn't say lots, a couple. And when we run the numbers together, what I've been seeing is, and for clarity's sake, these guys are usually buying the properties cash, and then they're renting them out, right? So let's say they buy a 3.3 or a 4.3 with a 2-car garage, and they're renting them out for $1,600, $1,700, $1,800 a month, whatever the house can afford in its area. But the consistency that I'm seeing, I did it again yesterday, which prompted this video, was that they're only getting about a 5% cash on cash return, or a 5% return on their investment. And so, why is this interesting? Because 10 years ago, we would have been looking for an 8 or a 9 or a 10% investment. But what these investors, I've been hearing from them, is that, listen, we understand that the return on our cash flow and our investment isn't as great as it used to be. He says, however, they are bullish. They think that the Colorado Springs market is going to continue to see some appreciation. So that's why they're investing. So they're banking on their 3.5, which is the lowest we've done, so like 5% return on their invested money as far as their rental income goes, and then they're also banking on, over the next however many years, on average, 3 to 4 to 5% appreciation. So we've seen crazy appreciation, double-digit appreciation the last couple of years for sure, but they're not even banking on that. They're even saying, if over the next 10 years, if it goes up 5% per year, then that is where they're really going to be seeing their return when they liquidate the property in 7, 5, 10 years, whenever they decide to liquidate the property, whenever they feel the market has hit that point. So kind of an interesting perspective. Personally, I would say that I almost always default to the cash flow perspective, because I want the income. These guys are established in life, and they don't necessarily, the income is nice and it's good, and of course you're going to take it, but they're really banking on the appreciation, which actually has me thinking about other things that a lot of the realtor community has been seeing, is that there have been large institutionalized investors coming in and buying and buying a lot of the homes that hit the market, again, cash. And so it's just something that I've been noticing, and I want to share with you all, just in the sense that if you are thinking about investing, don't forget, yes, obviously the cash flow is important, but don't forget to take in the appreciation aspect as well. Who knows what's going to happen in the next 1 to 10 years? We'll probably see a downturn before we see an upswing again. It's just this is the pattern of any market, including the real estate market, with the exclusion of things like Jerusalem and San Francisco. But that seems to be the pattern. So that's my thought for you today, is just don't forget to calculate your return on your appreciation when you're considering investments. Cash flow may not be what it used to be. We can't pick the properties up for what we used to buy to pick them up for. We can't pick the properties up for $150,000 or $200,000 anymore. And while rental rates have gone up like crazy, they have yet to really match the inflation of the pricing, right? So, if properties have come up 20% over the last 12 months, maybe rental rates have only come up 10%. And so that's why it's harder and harder to make those returns. So anyway, the last thing I'll leave you with as far as investing goes is anything that hits the MLS is going to be a retail product. So the more that you can pound the pavement, the more that you can turn over the rocks, beat the bushes, and find the off-market deals are going to be the better ways to invest. And so I've worked strategically with some clients to do that, and so I have some good ideas around that. So if you are considering investing and want to kind of beat the bush to find the better deals, especially for the fix and flips, then reach out and we'll get to work. Thanks very much. Hope you guys are well, and sorry for the long video, and I'll talk to you soon. See ya. Bye.